Hi everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. And boy, do we have a loan-tastic tale for you today. Get ready for some convertible notes and financing deals that might make your head spin. Today, we're diving into a report from Angel Studios Inc., a company you might know from its innovative approach to content creation. This filing is all about some recent financing moves they've made. Now, on August 11th of last year, Angel Studios entered into something called note purchase agreements. Think of these as formal promises to borrow money. They made two of these agreements with two different investors. Through these deals, Angel Studios agreed to issue what are called subordinated convertible promissory notes. That's a bit of a mouthful, isn't it? Let's break it down. Subordinated means that if the company ever ran into serious trouble, these debts would be paid back after other more senior debts. And to break it down, subordinated means that if the company ever ran into serious trouble, these debts would be paid back after other more senior debts. And convertible means these notes can be turned into shares of the company's stock. The total amount of money being borrowed across these two notes sums up to a hefty $7 million. This financing happened really quickly, closing at the same time the agreements were signed, showing a sense of urgency or perhaps a well-prepared deal. These agreements come with the usual business clauses, promises from the company and the investors, conditions that need to be met for the deal to go through, and ways the deal can be cancelled. Let's talk more about these convertible notes themselves. They're not just borrowing money, they're setting up a potential future change in ownership. These notes will pay an interest rate of 16% per year. That's a pretty high interest rate, which usually signals that the investors see some risk or the company needs this money quite badly. This interest is calculated every month and is based on a 368-day a year, a common practice for financial calculations. The money, along with any unpaid interest, is due by December 31st of 2025 unless something happens sooner. What's really interesting is what happens before that due date. These notes are designed to automatically convert into shares of Angel Studios Class C common stock. This conversion happens when the company's stock gets listed on a national stock exchange, perhaps through a merger or an initial public offering. The price at which these notes convert into stock is set at $39, which is pretty standard. There's a condition here that involves getting consent from another company, Southport Acquisition Corporation, for the investors to join in on something called a registration rights agreement. But good news for Angel Studios, all necessary parties have already given their consent, smoothing the path for this part of the deal. Beyond the automatic conversion, the investors also have the right to convert their notes into stock whenever they want, as long as the notes are still active. They can choose to convert all or part of the money they lent plus the interest into shares of Class C common stock. Again, this conversion is based on that 39 talars per share price. It's important to note that these convertible notes and the stock they might become haven't been registered with the Securities and Exchange Commission under the Securities Act. This means they can't be freely sold or traded without proper registration or legal clearance. This usually means these are private placements, meaning they are sold to a select group of investors, not the general public. This section basically confirms that Angel Studios has taken on new financial responsibilities. It's a direct result of signing those note purchase agreements and issuing those convertible notes. Essentially, they now owe money. This part talks about selling stock or securities that haven't been registered with the SEC, since these convertible notes can turn into stock. And they weren't registered. This section is there to explain that. They're relying on an exemption from registration, usually for private sales to sophisticated investors. This means the shares received from converting these notes will also be restricted initially, just like the notes themselves. This section clarifies how these new notes might affect the rights of existing shareholders. The convertible notes might have terms regarding prepayment or how they rank against other debts, and these could alter the rights of current investors. Here we see what documents are being filed along with this report. This lists the actual forms of the agreements and the notes they've signed. These are the key documents that lay out all the nitty-gritty details. Finally, the report is signed off. Scott Klossner, the Chief Financial Officer, is putting his name on this, confirming the accuracy of the information. So what's the big picture here for Angel Studios? They'd secured $7 million in funding, which is great for any growing company. The high interest rate of 16% suggests that investors see a good opportunity, but also some risk, or that the company was in a position where it needed to offer a higher rate to secure the funds. It is a common strategy to bring in capital while offering investors a potential upside. However, the fact that the notes are subordinated means that, in a worst-case scenario, existing creditors might be prioritised. The lack of SEC registration for these securities points to private smites, which is normal for early-stage or mid-stage funding, but highlights that this isn't public market money. Overall, this filing shows Angel Studios is actively managing its capital structure and preparing for potential growth milestones, like a public listing. The key takeaway is the $7 million infusion with a significant interest rate and a convertible feature that ties investor returns to the company's future success on a stock exchange. It's a vote of confidence from these investors, but the terms also suggest they're being compensated well for the risk they're taking. What's your take on this financing deal? Does a 16% interest rate signal strength or desperation? Let us know in the comments below. If you found this breakdown useful, give us a like and subscribe for more. And don't forget to join our Discord community linked in the description to continue the conversation. Thanks for watching, and we'll see you in the next Decode.